Taco Trump is back at it again, now with a push for a minimum of 15 to 20% tariff on all European Union goods, as well as rejecting the potential of reducing sectoral tariffs on European Union cars. You have to remember this bottom line with Trump. Donald Trump wants the money. He wants the income. They brag about the federal revenues from tariffs. And yes, they are up. The monthly tax receipts for revenues are excellent. $27.2 billion in June. Incredible. Let's be real though. We also just passed $3.2 trillion worth of debt over the next 10 years, which more than offsets the annual potential income that you would be getting from tariff revenues. Also worth remembering that somebody's got to pay for these. We're already seeing the damage show up under the hood on the underlying goods side of CPI, PPI, company earnings. Yes, we still have delayed tariff impacts because of inventory buildup, which keeps getting delayed because of Taco. But the higher the stock market goes, the more the market gives Donald Trump a license to implement higher tariffs, which at some point the economy is going to absorb and get hit with. So far, Q2 was good. Q1, not so great. Q2, good, because of the offset of our trade pull forward. Where are we going to go from here? Who knows? 10-2 yield curve, if we go look at the yield curve, suggests we're in shock territory again, 56 basis points. But what's the news here? Donald Trump has escalated his demands in trade negotiations with the European Union, pushing for a minimum tariff of 15 to 20% in any deal with the European Union. That's the entire European Union, which as a whole, I want to say they're our largest trading partner. Canada and Mexico are pretty big, but the entire European Union, let me see, trade with United States. If you put them in as a block, you had $851 billion euros of bilateral trade with the European Union. That would work out to about $1 trillion of trade. Trade with Mexico, United States, that sat at $839 billion. So the European Union beat Mexico. China sits at roughly $600 billion, and Canada sits at about $762 billion. So the entire bloc is our largest trading partner, above China, above Mexico, above Canada individually. The US president's hardened stance aims to test the European Union's pain threshold. Keep in mind, they keep suggesting that they're going to delay their reciprocal tariffs and reduce sort of the goods that they're going to reciprocally tariff us on until at least August 1st. Taco really doesn't begin until right after the Fed meeting. Fed meeting is scheduled for July 30th. Mr. Too Late coupon code expiration for the Meet Kevin courses on building your wealth is today. So you've got the lifetime access, either price going up or we'll just go remove the lifetime access and go back to the monthly option for all the courses, trade alerts, the alpha report, like our strategies this morning, talked a lot about Hood this morning, Open Door, all the others. You know this already. Mark your calendar for that, so that's today. The 30th is the Fed meeting, and then on the 1st is Taco August. So we'll have to see. Now, Waller obviously pushing for a rate cut on July 30th. It's unlikely we're actually going to get it. We'll be covering it live. But August 1st is the next big deadline because that's the end of the extension post the 90-day pause, which has continued to allow countries to pick up inventories at a 10% rate, right? Inventory buildup before April had a 2.2% trade weighted average tariff rate. After April, following the pause, we sat at about an average 10% tariff rate. Trump really wants tariffs to be probably at somewhere an average of about 18 to 22%. You're seeing that here with the EU deal. And really the market at all-time highs gives him this license. I mean, it's no surprise that on this news, the Qs are falling, but you're literally falling off all-time highs we just made this morning. The trend has been absolutely incredible on the Qs, straight up, breaking through all-time high after all-time highs. And this gives Trump a silver platter of a license to keep being more aggressive on trade deals, because mostly we think TACO will end up coming through and there'll be some last minute negotiation or another delay or a pause, blah, 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 blah. People familiar with negotiations say Trump has also been unmoved by the EU's latest offer to reduce car tariffs and would be happy to keep duties at 25% as planned. EU Trade Commissioner gave a downbeat assessment of his recent talks in Washington with EU ambassadors on Friday. Not good. In other words, negotiations not looking good. This is where you kind of start putting together like, Trump really hasn't negotiated a trade deal with China. We're at 55% tariffs, now threatening even more tariffs. Although the framework around the edges keeps shifting. Now we want battery tariffs, but we're going to give H-20s, and we kind of keep moving on, threatening pharmaceutical tariffs. Are we going to get the death penalty for fentanyl tariffs? Maybe. Does that make a difference over here? Who knows? Then we got the UK trade deal, Indonesia, and some of these deals are great, Vietnam, but they're also at relatively high levels for Vietnam, for example, and what you're seeing with Indonesia. The United Kingdom is probably the lowest at 10%, but that's a trade surplus country. All the others are really, unless you're willing to take 18 to 22% tariffs, you're not getting a trade deal with us, and you're just going to get assigned these higher levels. And this makes us wonder, okay, how are these negotiations going? Well, negotiation with Putin didn't go well. Let's see. One U.S., and now there's reporting coming out that even our deals with Iran or our strikes against Iran weren't as successful as potentially thought, with maybe only one of 3 facilities being completely destroyed, the other 2 still being active, or potentially able to be active within the next few months again, which isn't great. Which also comes after U.S. CENTCOM reported on the seizure of a bunch of military equipment to the Houthis from the Iranians. That's not great. This was actually just reported a few days ago. You can follow them on Twitter. US, let me see, was it this one? No, I can't remember exactly where it was. But it was US CENTCOM showed the seizure of deliveries from the Iranians to the Houthis just a few days ago. And then it makes you wonder, like, wait a minute, I thought the Iranians were talking and negotiating with us. What's going on? Y'all are actually still secretly arming the Houthis. U.S. CENTCOM reports that Yemeni partners successfully interdict massive Iranian weapon shipment bound for the Houthis. Here you could find the weapons arsenal. You could find the ship where it was found on. You could see the rockets, the warheads. Not great. Going back to this piece over here, the position puts the EU in a bind as it approaches the August 1st deadline, where Trump said he'll be willing to impose a 30% tariff. The EU has indicated it would retaliate over such a move, but is divided over taking countermeasures and may be forced to accept a baseline of more than 10% in any deal. At some point, somebody's going to pay for that, likely corporates in higher, expenses and therefore lower EPS. Whether we can still create sectoral rules, whether we can treat individual sectors differently from others is still an open question. Trump seems to insist on permanent reciprocal tariffs of 15 to 20%, which would basically be as high as they were in April and end up leading to EU retaliation. You've also got sectoral tariffs as high as 50% on aluminum. We don't want a trade war, but we want to know if the U.S. will leave us a choice. Second EU diplomat said that the mood has clearly changed in favor of retaliation. Trump sparked a global stock market turmoil in April. Now we're actually potentially starting to see the real impacts of we're going to land on some of these. The EU has planned several packages of counter tariffs, but has repeatedly pushed back its implementation as Donald Trump is trying to push back his implementation. So both of them, nobody wants these tariffs to go into effect except, well, frankly, Trump, because he wants that revenue. And so, in other words, we'll see where it goes. A person familiar with the latest proposal said it would include levies on digital services and online advertising revenue for counter tariffs. So far, some of those countermeasures on digital service taxes, like from the United Kingdom at least, against U.S. companies have been dropped. But the United Kingdom, also trade surplus nation, struck a deal with the U.S. That doesn't mean the entire European Union will follow suit, especially after Brexit. So I guess we'll see. But I guess we have to make a bet. Do we go for more taco?
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.